Hi, everybody. I hope you all had a wonderful holiday weekend. I sure did. It's always great to spend time with my dad and family. And my daughter, of course, has been home, so that's been wonderful too. Guys, I do want to talk about MMAT and MMTLP and the big question, have we been hustled? Now, what brings this to my attention at this point in time is an interesting article that I saw in Investor Palace that if you haven't seen, I want to address with you. And please, please, please share and like this video. I would greatly appreciate it so that the word gets out there regarding this, because I think it's something we all need to consider. Now, those of you that are still in MMAT, obviously, that's the only thing we can control right now, which is why I bring it to your attention. I haven't come to a full conclusion either way. I'm curious to hear what your thoughts are below, though. So please, after hearing this, comment. I'd love to know your thoughts on it and what you think Investor Palace has to gain from it. So let's get started. And please remember that nothing I say is financial advice. At the very end, we'll take a look at where MMAT currently stands. And I think I actually called this Investor's Palace instead of Investor's Place. Please forgive me. It's been a long couple of days. But anyways, it says the Bag Holder's Guide to Metamaterials MMTLP stock. It's not the first company to make non-voting shares disappear, but it's one of the most brazen. Last Wednesday, executives at Metamaterials MMAT finalized a bizarre transaction. In a single stroke, they converted the firm's entire listed block of preferred MMTLP shares into untradeable common stock of NextBridge Hydrocarbons, Inc. Now, guys, we all knew that this was coming. At first glance, the transaction seems like moving cash from one pocket into another. Metamaterials maintains full control of NextBridge 134,000 acres of West Texas oil, so little has changed to the enterprise level. It's easy to pin blame on FINRA for halting trading in MMTLP stock in the days before the transaction. Metamaterials stock, the making of a hustle. First, a little background. Because if you've lost money on metamaterials, there's a good chance it's someone else's fault. On December 13th, federal prosecutors said the SEC accused several online influencers of running a $100 million pump and dump scheme. Guys, I'm sure you're all familiar with the Atlas Trading, aka Zach Morris Group, that basically was hustling people on their private Discord and through Twitter and other social media platforms for these huge pump and dumps, of which CEI was a huge one. I believe Torchlight was the one that they are referring to in this article, but let's continue. That included alleged market manipulation and the precursor to metamaterials, Torchlight Energy Resources, yes, TRCH. According to the SEC complaint, 4 defendants brought around 800,000 shares of Torchlight at prices between $1.68 to $1.95 in February of 2021. They would proceed to promote false information about Meta itself. Example, that it was worth north of $4.8 billion and promoted and purported benefits of the merger. The 4 conspirators would later allegedly sell at prices up to $3.63 over the following week, just as momentum traders and social media watchers began to swarm in. The shares would eventually peak at over $12. In other words, investors who lost money on metamaterials were likely either 1, using faulty information designed to manipulate markets, or 2, following other momentum investors who were fooled by the first point. Mismanagement at Metamaterials. Metamaterials management, however, hasn't helped the situation. Since its 2021 reverse merger, the firm's top brazen has embarked on a massive spending spree, burning through an average of $34 million every quarter while avoiding capital raises. From a managerial standpoint, this is troubling. Research and development firms are notorious for their high capital requirements, And metamaterial executives have been spending cash as if good times will never end. The money raised from their upsized reverse merger with Torchlight could now run out by this spring. 5 stocks that could, oh, sorry, that's going on a different thing. Other CEOs tend to be more judicious from cash about capital raises. AMC Entertainment boss Adam Aron used high share prices to raise $6.2 billion and pay off debt, saving his firm from bankruptcy. Tesla's Elon Musk has pulled the same trick masterfully to fund his gigafactories. No matter which industry they're in, skilled CEOs will realize that capital raises are best used to fund specific events. Meanwhile, Metamaterials Management has done the opposite. By pursuing too many projects across at least 7 different areas, the company has stretched itself thin with little success to show. And capital raises are far harder now that shares are in the 125 range. Every $50 million in new equity now dilutes existing shareholders by 11%, assuming that that pain is spread evenly. The company's weak fundamentals only add to the concern. Metamaterials' legacy oil and gas business produces scant economic value, and 86% of the parent development revenues are derived from a single customer. Its auditors have issued a going concern audit qualification. How to make $71 million disappear. The most worrying issue, however, is the way the firm has treated its external stakeholders. Consider Metamaterials' deletion of preferred shares. In 2019, a similar case involving AM Trust Financial Services caused its preferred shares to essentially disappear during its $3 billion go-private deal in 2018. The company was taken to court by its shareholders and eventually settled for suit for $13 million. MMAT's case is even more brazen. Rather than simply delist the preferred shares and fold assets into its equity, management added language that severely restricts the rights of external shareholders. Pay attention. Here's from the company's NextBridge prospectus. Our board has the authority to cause us to issue, without any further vote or action by the stockholders, shares of preferred stock in one or more series to designate the number of shares constituting any series, and to fix the rights, preferences, privileges, and restrictions thereof, including dividend rights, voting rights, etc., guys. All right, here's the problem before I continue. Do you see that now they're saying that the board can issue, without having us vote, more shares of its preferred stock, which, guys, ultimately, we all know, or we all assume, that there was a major problem with MMTLP, and that's that there's not enough shares for them to cover what is owed, right? Now, MMAT, who owns NextBridge, is claiming that they're on retail side and they hate, the short sellers, blah, blah, blah. But guys, personally, I think that this is putting them in a situation to raise an abundant amount of capital in order for them to issue more shares of this preferred stock. And right here, it says that without our voting rights, they can do that. Now, guys, if more shares are issued, then that means the amount that each of those shares is worth is going to be far less to its holders, all of us that have MMTLP. So it's basically diluting something that really shouldn't even been here to begin with. Going back, we all know MMTLP never should have been traded, right? It was a placeholder for a dividend. This act was never supposed to be approved for trading. And furthermore, this was a NASDAQ stock and it got traded on the OTC. So here's where the problem began, which I'm sure most of you are fully aware of by now. But for those that aren't, or for those that need a reminder, that was problem number 1. Problem number 2 is that I think the reason that this stock got halted to begin with was because whoever was in charge of dealing with this at the OTC land when this was going private started looking at the numbers and realizing that the sheets didn't add up. There was way less shares. There were way more shares of MMTLP than there were of NextBridge. So now there's a big problem, right? And what's going to happen? Well, the only way I see a resolution is either hedge funds have to offer to settle with people that own naked shares that they don't have a share of NextBridge for, or they need to go to the company, which is the more likely, and make a deal with them to offer them X amount of dollars to issue the number of shares of NextBridge that they need. And guys, who loses in that situation? Guess what? The shareholders. Because then, supposing that NextBridge has true value of what some of you are supposing according to, I don't know, that ruler, pigeons, bird lady, whatever her name is. Sorry, guys, I don't follow this enough to know the true ins and outs, and I don't watch, these videos and this and that. But I've watched a couple to kind of get an understanding enough to relay what I'm trying to say to you. But my understanding is that ruler, pigeons, bird lady chick has broken down the math and has said that there is value in NextBridge based on the land, the oil, and her knowledge supposedly within that. Guys, I have no idea what her background is. I have no idea of how she's able to pull those numbers, and honestly have no idea of where she's deriving this value from, because first of all, it doesn't even make sense, because we were supposed to be paid a dividend based on the sale of this land. Well, if this land is worth so much, why hasn't anybody bought it in the 2 years that we've been holding MMTLP? Those of us that have had this since it's been Torchlight, right? And for those of you who are like me that have their shares of MMTLP that are original Torchlight holders that got this as a dividend, then you're well aware that we were supposed to be paid an X amount of dividend based on what the sale value was for the sale of the land with the oil on it. Now, guys, if it's as valuable as people such as Roller Pigeons Bird Lady, and I'm just calling her out because I know that she's the one that has put the math to the to this, then why is it that it hasn't sold yet? If it's so rich in oil and all this, why hasn't a big oil company come along and bought this up? This is what you need to be asking in the back of your head. This is what I'm asking as a stockholder. Now, personally, I think there's something way more to this, and it feels very scammy and very fishy, the entire thing to me, which is why I'm discussing it with you now and saying, for those of you that are in a similar situation, look at what they're trying to do to us. This article from Investor's Place is saying that essentially they're trying to take away our rights to vote on anything by what they've done. They put in this fishy documentation and wording into the hydrocarbon or into the NextBridge prospectus, and things are starting to look really bad for shareholders if you want my honest truth. Now, continuing on, it keeps getting worse. In the same section, MMAT's SEC file warns, your percentage ownership in the company may be diluted in the future because of equity awards that we expect to grant to our directors, officers, and other employees and current holders working interest in our Ora Grande project. All right, guys. So not only do we have to worry about them diluting these shares with the hedge funds to make a deal, allegedly, for the shares that are naked and missing, but now we have to worry about them diluting it further by giving MMAT directors and management and officers and whatever other employees shares, equity awards in the company. So in other words, the $71 million carrying value of the Torchlight RTO now finds itself at the total disposal of the Meta Materials board, No shareholder votes required. Guys, I hate to say it, but something here really stinks. It doesn't have to be this way. When preferred shares get delisted, they usually continue paying their original dividends, even if shareholders can no longer use public exchanges to cash out. They retain the same benefits that they initially signed up for. MMAT's management has instead decided to offer no cash dividends and instead give themselves large leeway in how to distribute any residual value. The Bagholder's Guide to Metamaterials MMTLP stock. That leaves current investors with few good choices. For Metamaterials' former MMTLP stockholders, the only realistic course is a class action lawsuit. These suits occasionally manage to recoup a portion of losses, and shareholders could use AM Trust settlement and others like it to argue their case. Punitive damage awards are rare. However, so many investors will prefer to sit on the sidelines and avoid the hassle. And guys, the reason that they know so many investors will prefer to sit on the sidelines and avoid the hassle is because guess what? The only people that get rich in these lawsuits are the attorneys. Shareholders recoup very little, sadly. For MMAT common stockholders, the choice is more difficult. Status quo. On one hand, investors can hold on to their losses and hope for the best. Metamaterials might still produce a winning product, as its investors' presentation breathlessly suggests. Or it could monetize its patents in a method often unflatteringly referred to as patent trolling. With metamaterials trading at close to $1, what's the most you can lose? Hint, it's very close to $1 per share. In other words, you could lose everything, right? Loss aversion. Other investors might feel that selling the remaining value they have left of MMAT is still better than nothing. Why hold on to $500 of shares that could go to zero? Either way, bagholders will likely face significant losses. Guys, either way, the reality is, aka bagholders, as in all of us that own MMTLP right now and all of those with MMAT shares that, bought them when they were much higher than they're currently trading at, we're who they're referring to as the bagholders, okay? The hundreds of patents that Metamaterial claims to have are only worth the cash flow they can generate, and there's no guarantee that any of its projects will yield results. Meta's dwindling cash reserves will either require a significant capital raise by Q2 2023 or the sale of parts of its business. Now, guys, it just goes on to say that investor place contributor Mark Hake once figured Metamaterials was worth about the cash on its balance sheet, around 56 cents a share. The longer the investors hang on, the greater the risk that bagholders will also know what it feels like to own hundreds of stuffed animals gathering dust in the attic. On the date of publication, Tom Young did not hold either directionally or indirectionally any position in the securities mentioned in the article. The opinion in this article are those of the writer, subject to investorplace.com publishing guidelines. So guys, the question becomes with this article, is this article being sponsored by perhaps an attorney paying these writers to write it? By a hedge fund paying these writers to write it? Or is this something that we as investors should be taking seriously? And really, do we all get duped here? That's the question that needs to be answering. Personally, I think it's not looking so good. I think that a lot of things have gone wrong from the beginning with MMTLP. And I think it's very easy for the CEO to place blames on FINRA. And I think, yes, MMTLP never should have been traded and that those blames should be placed on FINRA for allowing it and for whoever approved the OTC stock to be tradable, right? That definitely goes back. These companies, including Torchlight, were heavily shorted, which is why Torchlight had the run that it had way back a few years ago. But guys, now the question becomes, and the part that bothers me even more, it was one thing to know what happened with MMTLP and the halting of trading, all that, but to start looking at the dialogue and the wording and the way that they made it so that by taking MMTLP and making it not paying us the dividend that we were promised years ago, but by instead taking it private into Torchlight, I feel, and especially after reading some of the wording in this article, that this was a purposeful intent to dupe investors. And I hope to God that I'm wrong on this, but so far my gut has been pretty right in these horrid calls that retail investors have been trapped in. And I don't like what I'm seeing here. MMAT is very heavily shorted. I think it has an ability to squeeze, and I'm hoping to God it does, and I can get some money out of it. When it does, I'm going to invest, ride it up, and get the hell out. That's my personal opinion. You guys do what you want to do, but that's my thoughts because I've had about enough of this, and I think it's gamed at our expense. I just think what's going on has been an absolute nightmare. Again, I do think that MMAT has a potential run in it. Again, if they don't dilute first. If they dilute, forget it. It's all over with. I'm going to tell you that right now. Now, currently, this is showing that the short interest has dropped pretty significantly. It's showing that we're down to 14.78% short interest with 9 days to cover. Guys, the interest has dried up. I think there's a lot of people seeing what I'm seeing here. And guys, please pay attention because over the past several days, we went from having 0 shares available to borrow back on December 20th to currently having 55,000 shares available to borrow. So they do have shares that they can continue shorting this, scaring retail out of collecting again and again and again. And as you can see, our short interest from last week, where we were up in the 200s, almost 300%. Look at that, 297.11% on December 12th. We're now sitting at, the cost to borrow rather. We're now sitting at 91.42% cost to borrow. Quite a difference. And also look at the short volume ratio. Over the past 2 weeks from December 12th to now, on Friday, it was at 46.14%. But guys, it's been between 32.23 and 55.2%. So a lot of days it hasn't even been over that 50% range. And also, failure to delivers. As of the end of the month, they start to come into play. But until we get there, guys, the last few days of November, which remember, it's a T-30 settlement. So if you take today, December 26th, you subtract T-30, or I'm sorry, T-30. Then you'll get to your answer. But I think actually it might be T-35. I got to go back and look at that. It's been a while since I've actually done the numbers because a lot of the stocks I'm following haven't really had failure to delivers come into play, guys. And honestly, I believe when you see the next 2 weeks out, you're going to see that, guess what? MMAT no longer has FTDs coming into play because I think that you see the price has dwindled quite a bit. I think they got exactly what they wanted and they got the price to drop and people to sell and they got off the hook. So ultimately, I don't think this really matters, but we won't know for sure until we see the next 2 weeks that come out. And it is T-35. Sorry. I think I have a holiday hangover glitch or something, but I don't know. Anyways, guys, MMAT, I'd love to know your thoughts in the comments. To me personally, things are not looking so great, and I feel like they just added fuel to the fire. Was this intentional or not? I don't know, but I have to look at both sides of every possible trade or possible situation. And from what I'm seeing, I'll be perfectly honest, I don't like it. But, let me know your thoughts. And my heart goes out to each and every one of you that has MMTLP and doesn't know what's going on with it because I can feel your frustration. Anyways, guys, have